Hello and welcome to the Ledger Lounge, an accounting and business advisory podcast brought to you by James Scott from Oldham, Greater Manchester. So, welcome to the Ledger Lounge with me, Matthew Taylor, and Tom Colley.
Hi, everybody.
And today we've got our first special guest star, Sam Horner from Swoop.
Thank you, guys. Yeah, lovely to be here.
Welcome.
Welcome. Nice to be called special as well.
yes, as been said before. So, I suppose a bit of an introduction to Swoop. Who are Swoop and what do they do and where do they sort of fit into the whole accounting piece and business piece?
Yeah, so Swoop is a funding and savings platform for small businesses. We work with any business from a startup day one all the way through to exit. So we do have products for, as I said, startup loans through to a £20 million acquisition or management buyout. The idea of Swoop is to support all SMEs in their life cycle as a business, whether that be through grant funding, whether that's through traditional loan funding that you'd expect, equity funding, and then also we look at costs of the business as well. So their energy costs, foreign exchange charges, bank charges. So it's really taking a holistic view of an SME or small business and how we can support them as they go through. So where we fit in within the accounting space, we partner with accounting firms like James Scott to support them and educate their team around what's available for their clients. And ultimately, I guess, give them the confidence that their business is fundable, or if it isn't, we work on why they're not and how we get them into that position.
Yeah.
Because we know that typically a business would go to their bank. The bank may say no. They might look online, find something very expensive or not at all. And that's where we're ultimately there to show them exactly what is available to them and obviously supporting the accountants in delivering that information.
Yeah, I think we came across Swoop about 18 months ago, I think, at either Accountex in Manchester or one of those at the ACCA may have done a roadshow. And so our sage account manager, Jonathan, the wonderful Jonathan, who gets a shout
Jonathan
out everywhere, doesn't he, these days?
He really does.
He put us in touch. And I think what we found is that there was a lack of access to finance for small businesses, especially SME level, where the banks have retreated into their bunkers a little bit.
Yeah.
You've not got bank managers. You either go through a finance broker. That can come with its own challenges. You've got to find the right finance broker. So having a platform like Swoop seemed a really good opportunity for us to increase our service.
Yeah, yeah, and you're right. And from a broker's perspective, and there's again nothing wrong with brokers. We actually support brokers, so we give them access to the platform so they can make better informed decisions. What you tend to find is they have a niche, or it might be asset finance, it might be invoice finance, it might be commercial property, and that's tend to where they sit and work, which then, for you as the accountant or to the client, they get necessarily not the best experience, which is why we have experts in all of the fields. So comfortably if you're adding a client to the portal, our experts, depending on what they're looking for, will be able to deal with it and take it forward.
Yeah, that's what I've noticed, that when you do add something in there, you pretty quickly get a response back from an unsecured lending specialist or a trade finance specialist or whatever it might be, which has been good. I think you've used the platform a couple of times.
We've used it quite a bit recently, actually, for a couple of different clients. Some of them are looking towards maybe the invoice financing side of it, where they're struggling a bit with debtor days, and then they're just going for that traditional bank loan. And then there are a few where they're going for that, trying to purchase a property or something like that, so they need quite a bit of money. And yeah, it's good. We put them on the portal, you hear back pretty quickly, and it's nice to actually talk to somebody. Like you say, the traditional bank's gone, hasn't it?
Yeah.
It's a world I've never even known, really. But you can't go into a bank anymore. There's no such thing as bank managers.
Well, I was one for 10 years. I worked at HSBC for a year and did 9 years at Barclays in Halifax, actually, so not far from here. I was bank manager on Commercial Street for 9 years, and as I say, my job doesn't exist anymore. And unless you're turning over 5, 10, 15 million quid, you're not going to get a bank manager. Everything's call centre, and it's just a luck of the gods whether you're going to get the right one to speak to or not. And I think one of the biggest things with the banks as well, which most people won't know, but they have selective businesses who they will fund. For example, HSBC won't fund construction businesses. They see it as a high risk area. But as a construction business banking with HSBC, you might think you've got a good business, and then you present it to HSBC, for example, and they turn you down. But my biggest bugbear in the banking was we couldn't tell them why they were turned down.
And it was purely a sector specific.
Yeah, but they wouldn't be able to tell them why. They would just say, go look at your credit score, go online and find out. And that, to me, is not a great experience.
No, it's
for
not,
a business. And that then for the business owner, which ultimately is their baby, isn't it? They're going away without an answer or an expectation that their business isn't a fundable business. Whereas we've got probably tens, if not hundreds, of lenders who would, give the right arm to fund that business, who might specifically work just in construction, and they understand the businesses and know that, there's going to be longer terms or there's going to be later payers and stuff, and they understand the landscape of it, as it were.
Yeah.
That's it. One of mine were in the construction industry.
Yeah.
That's what their terms have just gone from 35 to 70 days.
It's mad, isn't it?
And they just need to cover that first couple of months or so.
Yeah.
Yep.
Until it smooths over, and that's it. But they say they go to the traditional banks and they don't want to know.
Yeah.
I think sometimes, especially with construction, applications can be challenging to finance, can't they?
Mm-hmm.
Yeah. Yeah.
So if you're if you're a construction business and you're submitting an application for the work you've done that month, and the QS at the other side, for whatever reason, challenges it, issues a pay less notice, or you then got cash flow issues.
Yeah.
So can Swoop help on that side of things?
Yeah, absolutely. And again, it's understanding it's understanding the full, I suppose, link up, and we know that there's so many different moving parts within construction, because you've got the subbies to pay, and then you might have another contractor that comes in that needs to be paid, but then we know that they're going to be dealing with a large, like say 70 days. Actually, that's quite small. Actually.
It is, yeah.
It's quite low.
I was talking to one last week, a potential new client, and they were on, I think they were on 90 days. Yeah, so that's another couple of weeks.
Yeah.
We've got to finance.
So there's some really interesting lenders out there now who won't bat an eyelid at that. If we know that, especially if it's a credible, business that they're working with. If it's, I don't know, working with Red Row or one of the big housing builders, they know that they will get paid. We know that there still might be delays after the 90 days because they will push as hard as they can. But from their perspective, they're going, well, okay, we know they're good for it because we've credit scored them and we understand exactly what's going on, so they can phase release the funds. Again, they can pay the subbies, they can get the materials they need to buy to be able to do the work and everything. So again, because they understand that industry and understand the potential pitfalls, that they can ultimately support them throughout.
Yeah, I think it's always a challenge, that one. So that's really good. That I suppose it's not just always small businesses. Established businesses that you're dealing with. You've got startups, and startups are always a challenge because we have access to the sort of Northern Powerhouse Fund has some reasonable access to finance for startups, and then even growing businesses. But when that element of the finance runs out, then you tend to get stuck between a little bit of a rock and a hard place. You're growing your business, you're perhaps burning through the cash because the business is expanding, and you're financing the debtor days or financing stock. And I think I was really interested in a piece on LinkedIn that your CEO Andrea did about a product that she'd seen you'd helped to finance at the beginning and had seen internationally. Yeah, which was incredible.
Yeah, and I think for going back to Andrea, that was her mission, and she's an accountant by trade, but just saw the frustrations of businesses and good businesses coming to her with a need, but not being able to service that need, or spending half of her life trying to find the funding for her, whether it be grant funding, whether they're looking for equity investors or startup funding, or it's the Northern Powerhouse or whatever. Just trying to find that is so difficult, and it's a full-time job in itself, which is again why she was like, I want to build a platform that has everything that is available to a business. And it might even be that, to start with, yes, we can go through the British Business Bank for a startup loan, which is, and Swoop started out on that. So Kieran and Andrea took 25 grand out each. It is classed as technically it's based on your credit score as you as an individual, because there's no history obviously of the business. But that's at 6% over 5 years. So it's a really, really low cost solution. You do have to go through a lot of hoops to get to it, but if that bit's run out and you've used the 25,000, because you can do up to 25 per director, simple things like a credit card. Like we work with a number of credit card providers like Capital and Tap and stuff. They give you cashback as well. So it's like, use it wisely, and as you grow as a business, that facility will grow, and then it might be actually that you might. You're going to gain credit from using it and paying it, as as I always used to say in the bank. Start with that and small credit limits, but use it, to buy your fuel or wherever it may be. Make sure you're paying it off on time, but then you open up to further facilities, and it might be that I don't know. There might be e-commerce sellers. If they can see what their current. Their sales are as well. They can put a facility in place, like you would see a traditional overdraft, but it's based on sales rather than just going, here's your overdraft and, we'll review it in 12 months' time. It's a case of, well, actually, as you grow, we will increase that facility. And what's really nice about those facilities as well is it's all based on your future performance. So the payments they're a percentage of your sales. So you might be a seasonal business, you might do amazing over Christmas period, but then suddenly January drops off a cliff. You've not got that liability to pay back, the £1,000, £2,000 or whatever it was would have been agreed on a secure or a standard loan. It's based on your transactions. So again, just gives you that bit of flexibility, and hopefully it grows as you grow. And again, you see those examples that Andrea shares. I
know that was incredible, that one. I can't remember the name of the brand now, but probably should have concentrated a little bit more.
No, don't worry.
I think obviously let's say 18 months ago that we was introduced to Swoop. I think it's quite interesting the way you talk about Andrea. How did it come about? Like you say, they almost saw like a bit of a gap in the market, I guess, didn't they? And there's customers out there that aren't being satisfied. What can they do to do that? And that's where Swoop comes from. Can you tell us a bit about it, where it's come from, a bit of the history and how it's gotten going?
Yeah, so Andrea was a partner at KPMG. And I guess, being a female in an accounting, in a large accounting practice, we know that the world has changed or is changing, but wasn't a great time, and saw that she had an opportunity to set up her own firm. So she set up more of a corporate advisory firm, and she was dealing with predominantly with small or startup or tech startups that were looking for funding and needed that money to grow and get to where they're projecting to be in 2, 3, 5, 10 years time. And she really, really struggled to find the right solutions out in the market, whether it be grants, equity, loan funding, cost savings, whatever it may be. So Andrea had this idea of building this platform where literally as a small business, you can put some basic information about your business. And the idea is that it shows you everything that's potentially available to you. So in May 18, she formed the business with Kieran Burke, who's the co-founder. And Kieran's background, he'd been building platforms. It was actually for a creative industry, and built essentially a platform for them, and saw an opportunity to be able to apply that to funding. Yeah. And then we fast forward from May 18. We've got 300,000 customers. We were born in London, but you might guess from the names, but Kieran and Andrea are Irish. So we have an Irish operation based out of Dublin. We also have Australia and New Zealand. We operate in Canada and the US as well. In fact, Andrea's in the US at the moment, Atlanta at the Sage Future.
Oh, yes.
Conference at the moment. And then also more recently, we opened probably about 12 months ago out in South Africa as well.
Okay, correct.
Yeah, so the really nice thing about Swoop is we can quite easily open in every country. Naturally, we've gone for English speaking first.
Yeah.
But the idea is that as long as we can build the lender relationships in each of the countries, and ideally have access to the technology like open banking and and accounting integrations as well, then we've got a lot of rich data that we can essentially then feed that back to the small business and also to the accountants as well. And then, with the more you use the platform and the more that we're integrating the data, we can then present back to you findings that we can see that due to trends, it looks like there's going to be a gap here. Maybe we can look to fund that, or we can see, on average, your energy bill is higher than businesses of your size. Can we review that for you? We've also now just brought into the platform, which you'll have seen, is credit scoring as well. So you guys get access, so you can see exactly, the credit score of the business, the fundability of it, and all of the insights. But also through the white label versions, that means your clients can also see that information as well, so they can get a good understanding of what their business looks like and how we can help improve it as well.
I think that's something that I don't say missed out or forgotten about a little bit, is the white label side of things, because when we took Swoop on, it's called white label, isn't it? But it's basically a link through from our website through to Swoop, so that anybody, any it don't have to be a client of ours to access this platform. And it's something that I've not really used, because we've tended to be the source of the inquiry. It's probably something we need to promote a little bit more, because I imagine that could also bring clients to us as well. So that's the
100%. And the way that we look at it is, it's one of the cheapest marketing tools you'll ever have. Being able to say to a business, whether they're working with you or not, register for free and see what's available. It might just be grants they're looking at. Whether it's local grants, national grants, Innovate grants. There's over 500 on the platform, and based on the location and sector, we will then filter that down to what's relevant to that business. So even that alone, and being able to see their own credit score is really powerful. But then opens up to so many other things that they can look at as well.
Yeah, it was that was a really interesting little add-on. I think that we've overlooked, and I think we've probably concentrated on the platform and servicing our clients rather than getting that word out there.
And again, no accountant is built the same, and accounting firm, everybody is different in the way that they operate. But we do have some firms that don't actually add the clients themselves. You guys are adding them internally.
To be fair, we all got the blue and white memo and the Shackit memo, didn't we, today?
Yes, you got that memo, but just not the white label. But
we all dress the same, but not built the same.
Exactly. Obviously, I'm on the right side of the pennines as well. I don't know why I did that pointing thing, but
it's that way, I think.
Is it that way? Okay. Well, you've turned it
doesn't work well on a podcast pointing.
No, it doesn't really. No, it doesn't work well anyway. You just tend to do the pointing.
Yeah, it's okay. We'll see you to the border.
Yeah, exactly. I've got my passport with me, so I'll be fine.
Adding on to that, it's always real-time data that people are getting. People are using these like cloud account software, things like Xero. You got things like Sift Analytics that pulling all this data through. When things talk to each other, and Swoop can connect in and look at things like that, and then almost tailor finance to that business. It's so much easier for people to actually get what they need.
Yeah, exactly. And you know what? I've been in this industry for 10 years now, and it's come on leaps and bounds. It's amazing what we can do. And we know, for years we've had different forecasting tools and so on. And I know from speaking to accountants, I've not lived and breathed it myself, but you can produce these amazing, beautiful graphs, reports and everything. But what does it mean to the business? It doesn't give them the end result that they need. It makes them think a little bit more about what they can do, but it doesn't give them the solution they need. And now we've got the solutions. It's going, okay, because of this and that and where your numbers are, that means we can now do this, or you might even you might even sit down and do a review with them and say, right, okay, you want to buy, a new warehouse or whatever in 3 years' time, or you want to get ready for exit in 3 years' time. Well, actually, with this, where you are right now, we can actually put that into action now. We know that the affordability is there. We know that the growth is there. So actually, why don't we start looking for that warehouse a year earlier, which means that you're now employing more people. You should have increasing profits and growing that business in the way that you want. And I think it is just, like you say, using the technology to give them the confidence that what they need is available. Because most businesses, if you ask them, and again, to get the age-old thing when I speak to different accounting firms, they go, clients don't need funding. Have you asked them? Well, I haven't asked them, but they haven't asked me. And I said, the reality is the reason they haven't asked you is because they don't think it's available. They don't think that their business is worthy of, whatever it is that they need. And it's about being able to identify those, spot those opportunities and have the conversation.
Yeah, we've talked at length on this podcast in previous episodes about the way that we work at James Scott is to try and make our work as efficient as possible by using technology or by using bots for processing and things like that, which then frees up our guys' time to talk to the clients.
Yeah.
And once you open those lines of communication up, you find out that, I am planning on some new plant in 6 months' time. Or are you talking about tax planning? Well, if you're going to get, do you need any new van?
Yeah.
Well, let's get it before the year end and things like that. And so that then us being able to not just suggest the plan, but actually to put that into action that's the bit that I think that Swoop has given us at James Scott, is that ability to action that plan.
Yeah.
Instead of just going, right, go and speak to a finance company, go and buy the van and speak to the garage about their finance.
Yeah.
And that's a really useful tool for the client, because you're giving them we always talked about an end-to-end service, but actually when you look at it, the end-to-end stopped about 70% of the way through, 80% through, and now we can add a bit more on. And there's probably other things we can do.
Yeah, and I think that what I love about you guys, and sorry to blow smoke,
carry on,
and and which is again why you get invited to do all the panels, and you're like Brendan did the fireside for us. It's that view of compliance is just it's so necessary, but it's about getting that bit right, which means you've then got the time to have the conversations. And that's the only time, you can look at a set of accounts. You don't know that they need to buy a new van because of that. You don't know because of the quirky things that's going in that business right now that's causing them issues and headaches and keeping them up at night. You'll only find that out if you have the conversation. Yeah. And, it's amazing. I did a panel session, accountants. In fact, Lauren on the podcast said she was going to listen to it. It's all to do with being human within the accounting industry.
Yes, she did, and she came back. I think she enjoyed that one. Yeah.
Oh, good. Well, I'm glad she enjoyed it. Yes. But
I'll tell her it was you.
Yeah. Well, there you go. She don't. I won't remember me, but hopefully now. But one of the things Stephen talks about was on a Friday, he had a small portfolio of clients, and he just sets aside time to just give his clients a call, just say, how are you? And it's just literally, I'm just checking in, how are you getting on?
Is that Stephen Paul?
Yeah.
Is he one of the nicest guys in accountancy?
Oh, it has to be. Yeah, apart from yourself, of course, or both.
But they say one of.
Yeah, one of, yeah, exactly. But genuinely, that piece of just shooting the breeze, having the conversation, how are you getting on? No real, I guess, KPI to hit or anything like that, but having the conversation. It's just checking in to see if they're okay. And that's when you get the gold. That's where all the stuff comes out and you go, okay, that now makes sense. And now we know what is going on, within your personal life, your business. I mean, you get told so much as well, probably things you don't want to know. But that's when you can start to understand, okay, that's why the numbers look like that. That's why there's this. And then you can then start prescribing, can't you, and helping them with what they need. But without that conversation, But even in Stephen's practice and in our practice, the same, that if you're using inefficient processes,
you don't get the time to do that.
Exactly.
Having those processes, that efficiency, using technology, all just adds up. And then all of a sudden you go, I've got this time. I'll ring my client. So that's, I get where he's coming from with that. And that really...
I also think there is a real fear in the industry of moving away from numbers and advice. That whole advisory piece scares the hell out of people, but it's just having a conversation. That's all it is. Yeah. You don't realize how much you do of it during the day, in and out conversations with clients and so on. That's advisory. That's just being human.
I've spent the last 5 years probably watching videos or podcasts or listening to podcasts or pieces on LinkedIn about advisory
Yeah.
You've got to move to advisory.
Yeah.
You know, compliance is dead. Let's all do advisory. And then you think, well, actually, when you break it down, we're all doing advisory all the time.
Yeah.
It's just that somebody's badged it as advisory and
Yeah.
made a LinkedIn post about it and said, I'm the future of accountancy because I'm doing advisory.
It's almost like one of these new buzzwords, isn't it?
Yeah.
Advisory.
Yeah.
Honestly,
I think it's right though. And I think you hear these talks, so and people are saying you have the old-fashioned accountants, you hear from them once a year. Here's your tax bill, here's your accountant, I'll see you next year. But then, like you say there, it's actually talking to the people behind the businesses.
Yeah.
And it's not just numbers and names, is it? It is real people.
Yeah, and I think also I've been doing some work for an accounting firm and speaking to some prospect clients of theirs and just asking them, you know, what did they go into business for in the first place and what's their exit? You know, what is genuinely what, you know, and it blows their mind. They're like, no accountant's ever asked me this. Obviously not a James Scott client, of course, but, you know, genuinely going, they're normally just saying, how many transactions do you do a month? And this is their price. So that's literally all they're getting. And again, that's that whole race to the bottom, you know, get the compliance piece in and we just concentrate on getting more compliance. But actually, businesses don't want that. They want somebody who's human, someone who will have a conversation with them, maybe, you know, have a beer with them or a laugh with them or whatever it may be. You know, they want that human side. And I think for me, it's so important. And I mean, look, there's so many firms that don't do it, and whether they will change or not, I don't know. But you know, thankfully there is ones out there like you guys that do.
It's surprising, that accounting firms don't do it.
No.
But when it becomes second nature to you, and that's just the way we.
I mean, some people are just personable people, aren't they? They're not ringing just to tick the box. They genuinely do care and genuinely are interested, aren't they? And it's almost, you can see the parallels, like you say there, between what it used to have when you have your bank manager and you'd actually give them a call. And that's now all gone a bit robotic and a bit bureaucratic. Yeah. Accounting has now gone the other way around. Yeah. And it's becoming a bit more personal, a bit more real, a bit more.
Well, one thing that hit home for me when I was a Premier Relationship Manager, and one thing that hit home when I realised there was, and it's a buzzword, but trusted advisor, was one of my clients rang me and asked me if I knew a good window fitter. Now, I'm looking after their banking, but they're asking me a recommendation of somebody, who do I know who's a really good window fitter? And suddenly it was like, wow, okay, I am their trusted advisor because the time that I spent with them and the relationship I built, they expect that I'll be able to deliver, you know, the same recommendations, you know, outside of you know, working with me. So yeah, and I think that's and you know what, as well, it's fun, it's enjoyable. I don't know about you guys, but I'm nosy as a nature.
I love recommending people.
Yeah.
We just like talking.
Well, we just like chatting, don't we?
If you can do your job and you smile while you're doing your job and go to work and come home, and in between it's actually fun.
Yeah.
All right, man, this is still an accountancy podcast. I'm not talking about fun, but we are still accountants.
But it's true. Yeah. It's like, well, what's the point? You know, you work so hard and you constantly grafting. There's always something to be done, but if you're not enjoying it, then you know what generally what's the point? And and I know I keep talking about that human piece, but it is, you know, you should be able to speak to your clients the same way you would your mates or your family or, you know, whatever it may be, and just be open and honest. And I think that's, again, from working in the banking environment. I remember when I moved from Barclays I worked for a law firm, and then I went to go work for Receipt Bank, or DEX as we know it now. Yeah. And one of the things that they used to do early days, and well, they'll still continue to do it now, is you used to listen to everyone's calls, and you'd have people listening and critiquing and saying, "Oh, you could have said this or you could have said that." Now, when I went into that role, I was so scared of that, because in the banking world, that was a chink in your armor. If you didn't know something, or you know, there was someone had questioned what you'd done, that was a bad thing, and it was deemed as you weren't good at your job. But after probably about 2 months of doing it, I realized actually it's not that at all. It's just about helping you become a better person, build a better relationship, and being able to help more people. And as soon as I got my head around that, it's just, and every business should do it, genuinely should do it, and listen to what other people are doing for the right reasons, obviously not to ridicule them or whatever for things they've done wrong, but more about, have you thought about saying this? Have you, like, and I'm sure you guys will have it, or would have had it in the business previously, where there's pockets of information that a partner will have, but won't be shared with the rest of the team. And it's
Yes.
mad. And again, especially in larger firms where they go, well, John does it this way and Barry does it that way and Julie does it that way. And it's suddenly like you might have 18 partners, but you've got 18 businesses working, separately. And that's the crazy thing for me. It's like, you should all know what's going on.
I think that's the beauty about us being a relatively small firm of accountants. I mean, it's probably a good job we're not any bigger, because I'm not very good at change management. And I tend to go, this is where we're going. Right, follow me.
Yeah.
And I was having this conversation with somebody else yesterday, and we were talking about maybe changing the systems in a business.
Yeah.
And I said, I have to hold my hands up. I'll just go, this is what we'll do.
Yeah.
And I'm not very good at the change management thing. But you've just got to hold your hands up sometimes and find somebody who is good at it and let them do it. haven't you?
Well, I think that's the art of good management, isn't it? It's finding the right people who do love it and want to, get this stuff. Like you say, you don't want to be delving into the systems and stuff, but I'm sure you've got someone in the team who loves that. And, it's empowering them to do the work. And it's like the whole compliance thing. Again, going back to my early days when I was at Receipt Bank, and people going, what are my bookkeepers going to do? I said, more value work.
Yes.
Either more bookkeeping for more clients, or let them speak to a client. They're like, oh, we can't do that. I was like, yes, you can, let them speak. I'm sure they've got some great relationship skills, and, give them an instant promotion.
Yeah. I mean, going back to debt, and we love Dext at the office, and 90% of our clients that we will using it, and we'll just use it for data transfer or getting information from clients. And this client I was talking about yesterday, are still scanning and attaching, and the pushback was, well, it only takes a second to do, but it's a second times however many. And if you don't need to do it, that's also handballing it in and typing it into the system. So it's just like,
and it is. I think that's one of the things that, as you quite rightly say, you might find a new system and you go, we're doing it. But it's also, I think, every part of the journey, everybody's involved in it and touching whatever it is you're using needs to understand the value of it. And it's like, like you say, it only takes a second, but times that by 1,200, and it's not really a second, is it? Let's be honest. And you start breaking it down, and they go, well, actually, okay, I realise it was 3 minutes per.
Yeah, you've stood at the scanner for
a minute an invoice. You've got 60 invoices. There's an hour of your day gone.
Yeah, exactly.
Data entry.
Yeah, and then you're going, well, if you actually started thinking about chargeable time, and I know, not everybody works that way, but if you genuinely thought about, as that business owner, what is it costing you, for doing that? Genuinely, you could be doing something that's more value, that's generating more revenue for the business. And it's mad. Or, you know what? You might have the hour back and, go spend it with your kids or go play paddle or whatever.
Right. Yeah.
Yeah. It's just madness, isn't it? It really is mad. But again, I think as humans, it's all we know. It's just what you know, isn't it? And it's fear of change.
Fear of change is a big thing. Yeah.
This is probably one of the most rapidly changing fields, isn't it? Even just over the last 5 years or so, accountants, since COVID, I think, and you've seen it with James, we're so flexible with some things, with this like new ways of working and stuff. We're almost always at the forefront of radical change, aren't we? And Swoop's kind of like one of the next parts of that, is it's changing the way that businesses source finance.
Yeah.
It's all part of it.
Yeah. I mean, not every business is a perfect business either when it's looking for finance, and quite often it can be in distress. Can Swoop help there, or is that an issue? They might have you mentioned credit scores before. They might have a low credit score.
Yeah. So as a rule of thumb, anything under 45 out of 100 is unfundable, or most lenders won't look at it. However, we work with a partner called Lightbulb Credit, who will look at improvement of their credit score. So Lightbulb, we can run a report for free. You guys can access it on the portal. You can run them on any clients if you want. And what that does is it takes it across all of the agencies, the credit agencies, because this is the frustrations. Different lenders use different credit agencies. So they might look really bad on one, but actually okay on another. But that lender might only use the one that looks bad.
Really? I didn't realise that.
Yeah, so what Lightbulb do is they take all of the credit scores on each of them, and they will then look at the score and say, actually, we can improve it by 25, 30 points. and this is the work that we need to do it. And it is a chargeable service, but typically about £1,000 for them to do it. But if that £1,000 is between you growing your business or distressed business, getting you out of that distress and helping you, continue on your way, it's, money well spent. But yeah, again, that's a free service that we can produce the reports for you to see what the issues are. And it might be, and it's amazing how many businesses don't realize that they've got a CCJ or something that's looming in the background. And it might be an old auto phone bill that they were disputing and it never got satisfied, but they might not even realise that they've been blacklisted because of it. And that's the type of things they can work on to get them removed, and again get them on that clean slate, as it were. And
so it's not the end of the world if you've got a CCJ or you've got a low credit rating. You can. Yeah,
and also what lenders love is we've got the financial data, but actually understanding why it's there. What is it that's going on in the background? If we can put the human side of it and go, well, actually, the reason why this £270 CCJ is sitting there because of X, Y, and Z. If they understand the reasoning behind it, then they can actually overlook it and get the funding in place as well.
Okay, yeah.
So it's always worth a conversation, regardless of the state of the business, because there's things we can do to improve it. Now, one of the things that a lot of people don't realize, like, for example, energy. So when you take out a new heating and light, British Gas or whoever it may be, if they have a poor credit score, what they will do, because ultimately they're buying the power off the grid at that set price, and they'll buy 12 months worth of power from the grid at the price that has been agreed with the client. If they have a poor credit score, they will hold up to 50% of that amount in escrow. Now, that is a real issue for a business. Is suddenly, I don't know, they've got using 50 grand's worth of energy over a 12-month period. They've got to put 25 grand to one side, which most businesses are not going to have that. And why would you wouldn't want to do that? So again,
we certainly wouldn't want to tie up working capital that you'd unnecessarily, would you?
Yeah, exactly.
Just hard enough to come by anyway.
Yeah, just so you can get your heating sorted and make yourself a coffee. So again, the importance of having your credit score right prevents you having to go through things like that with your energy providers as well. So, and also things like that, energy is an unregulated market. So we could have the identical offices side by side, but you could be paying double what I'm paying. So, all we need is the front page of the energy bill. You guys will have that because you're using DEX.
Yes.
We just file it into the system and come back and go, these providers, you're going to save X amount of money. If we can't make a saving, we put them on a tracker and we alert you when there is. So there's so many things that we can do. And I think actually, Matthew, you might remember this. Andrea told a story about someone who came to us early on when we only did funding. We didn't do the savings side of things. And they'd been rejected from their bank, I think it was Lloyd's at the time, because of affordability. Now, Andrea reviewed their banking and found that they were paying, I think it was about £2,000 a year on Lloyd's charges. So we rebanked them, which then freed up £2,000, which actually covered the repayments of a loan through another provider. So we found the affordability there. And so the bank was declining them on their own charges. It's just insane.
You can't afford the finance because we're charging you more than,
Exactly. And that's the thing. It's like, and it might even be foreign exchange. Okay. Most businesses now are trading internationally. There's something that they're doing. Might even be software subscriptions that are paying it in dollars or whatever. Always worth reviewing that. Always worth reviewing to see what potential savings could be made on there as well. So there's so much that they can do. Again, it's just knowing about it. And that's where, again, that's why we built by partnerships as well. So we power Compare the Market as well. So all of their funding that goes through Compare the Market is a white label version of Swoop.
Oh, okay.
In the same way we work with Sage to access, which is where we got the introduction, to work with the accountants that they work with and be able to give them the access that the businesses need.
Right. Okay. That's really interesting. Yeah. So if you've got a business then, so you're starting out or you're midterm in a business and you want to improve your chances of getting finance, and not just getting finance, but getting finance at the right rate, which is also important on the right terms. Are there any tips that you should be doing? I know one we were talking about was we filed some accounts very, very soon after the year end. So I think it probably demonstrates, one, you're on top of your numbers. Two, you're proud of your numbers.
Yeah.
Because you do see so many people who wait until the last minute to file because they're trying to hide those figures a little bit. But is there anything else?
Yeah, I mean, well, that was the big one I was going to say. Genuinely, if you can file early, because credit score is based on your last filed accounts ultimately. There's other factors within there, but that's the main contributor. So, when Matthew's badgering you to get your accounts in and all your information in, do it. Because there is not just because it means that it's all sewn up quicker. There's massive benefits to you as a business because it can really, really impact the credit score on there. I guess what I would say is in other areas is just be on top of your numbers. Know where you are, understand your debtors as well. Make sure that they are paying on time. There's so many things out there which you guys, I'm sure you use. You can pay now with zero, can't you?
Yes.
On the invoices. There's other providers that if they pay early, then there's potential discounts for them. There's a load of lenders out there as well who will now. I don't want to use the word pay now. Buy now, pay later, because it has a negative connotation with it. But you as the supplier essentially can offer them so they might have 28 days, with you, or 70 in the one that you just mentioned earlier, where they might look at that invoice and go, oh gosh, I can't pay it now, and they'll put it off, and then suddenly you guys have to start chasing, or the business owner has to start chasing them, and they probably get to day 37 or something like that, and they finally pay it. They now have there's facilities out there where they can pay instantly. But they effectively what happens is so they'll pay the full invoice, the 100% of the invoice on day one, but they will then just have a payment plan or a spread payment plan with the lender, which means that actually those 28 days where they were struggling, or 37 days to get the funds together, they could actually have it repaid before that period even ends. And they'll pay a small amount of interest. Yes, there is interest, obviously, but it means that from a customer-supplier relationship, it's then going, well, actually, they're always paying us on time. You're always on time, which actually means that they might be able to negotiate better terms. So it can, ultimately it can work out better for them, and probably in the end cheaper, even though there is an interest rate being applied to it as well.
And if you get that principle in place, then you're also saving on debt collection costs, aren't you? So your credit control team can focus on the problems. And another thing as well, if they're VAT registered, don't go time to pay through the HMRC and the revenue. And I know you guys must have painful phone calls on hold to the revenue for 3-4 hours, arranging a VAT time to pay. So when I talk about time to pay, that's essentially they've got a VAT liability of 10 grand, let's say, for example. They can't afford to make that 10 grand payment. So you can then with the revenue, put a payment plan in place over that 3-month period. You probably saw in the last budget, the revenue have turned around and said, we're not a bank. We don't, we're not here to support you to be able to, stretch your payment. The reality is you should have that 20% or whatever the amount is set aside every month. We know in reality, most businesses don't. But if you go through a time to pay, they've increased the rates. So they're 8.25% now. And also that actually goes as a black mark from a lender perspective. So say you've gone and you've put an arrangement in place and you've got a time to pay set up, you might then want to go out and buy a new van, for example. I guess it's a typical one that you would see come across. A lender would look at that and they'll see that there's a time to pay arrangement in place. And their view is, if you can't afford to pay the revenue money that you technically had, then you're a high risk to us. So we have a number of lenders that will actually spread the VAT payment. In fact, I was on a call with gathering some information for one this morning. There's got an 18 grand liability due by Saturday, I think it is. Yes.
So we're supporting them. Yes, they're going to pay a bit of interest on there, but it's going to put them in a healthier position in the longer term. And also, you might not want to spend that money. You might not want to use it to pay the VAT. You might want to buy some more stock with it. We even have profitable businesses that spread, the payments over 3 months simply because they don't want to ruin the cash flow. They want to keep it the liquidity there for when they do need to buy stock or whatever it is they need to do. And I just think there's so many options out there now. Make sure you've got a good accountant like James Scott that are keeping your numbers up to date, and that should set you on the right path in being fundable. And if you're not in that space, then again we can work on them to find potential improvements for them as well.
That's really interesting. That is excellent.
Well, Sam, I think that's been really good talk, actually. I think there's a lot of things on the financial side there that people probably didn't know. And hopefully from listening today that they've actually learned that there is funding out there, and using things like Swoop, going through our website on the portal, a business can grow, or can help them out of distress. But I think thanks for coming on the podcast. Thanks for talking to us.
Yeah, thanks very much.
It's been
great.
Sam.
Yeah. No. Thank you for having me. Genuinely
on our promotion special.
Yes, exactly. Yeah, up the Leeds and Oldham. Sorry, I've got to get that one in, haven't I? I've got to get that one in. And all the other listens that are listening national and internationally, we probably should mention some more.
Yeah, I'm sure somebody else got promoted this year.
Yeah, definitely. Yeah, but the right ones got promoted. So. Yes. Yeah, genuinely, thank you.
It's been great. Thank you very much.
Thank you so much.
The Ledger Lounge is brought to you by James Scott Accounting and is hosted by Matthew Taylor, Katie Allan, and Lauren Thompson. For more information, visit jamesscott.com. This podcast is recorded at and produced by KUPOD Productions, audio by Matt Dean and video by Eddie Corteen. For more info, visit kupod.co.uk.